So as we get started, again, my name is Sky Parker with CBR. CBR is the firm that does the payroll, the HR, the benefit administration, and now we're rolling out a very awesome opportunity, a 401k plan that's going to be effective in July. This slide shows that the strength of Voya Financial, they're one of the top 3 national record keepers. You can see the number of plan sponsor clients that they have. They've been around for over a quarter of a century. So this is a very top-notch firm, and I think you're going to like the technology. This is going to be a great opportunity for you on your savings goals. We'll go over some reasons why saving through payroll. We'll go over the advantages of that, and then obviously the incentive that the company is going to provide to you. And I'm going to get a little bit into the technology. I did speak to a couple people yesterday, but if you take advantage of this plan, I do want to go over this, the retirement savings software, because it's very valuable. First step is savings, but where I do want to start is how to enroll. Once you meet eligibility on this plan, you can enter it quarterly. I am going to go over some plan highlights on eligibility and loans and some of the housekeeping items. But when you're ready and eligible, the first step to enroll is going to be online, and it's at this specific website. When this is a completely paperless benefit, so when you do make the decision to register or enroll online, you're going to need this unique plan ID number and this verification number, and that will start the process. It will bring you through prompts of you want to make elections like your beneficiary. It'll prompt you to go through that retirement software that I talked about. But really the first decision you're going to make is going to be your contribution rate. The reason for the meetings this week is if you are ready to start on the 401k right away, we're going to need you to do this by next week. And your first opportunity will be your first pay period in July. Now, if you miss that or you're not quite ready to start saving, you can't. It's a very flexible benefit in that you can enter the plan quarterly. So your next opportunity would be the first pay period in October, January, the following April, and so on. So it is a very flexible benefit, and it's up to you when you're ready to start saving to go through the enrollment process. Also on this page is the number for Voya. You can do over the phone enrollments. The other resource that I'll get into a little bit more on Voya is outside of myself. It's going to be probably another very good resource because they're open from 8 a.m. till 9 p.m. Eastern. And once you register, or if you need help registering, just about anything you can do on the plan, you can do over the phone with them. They can actually make trades on investments for you. If for some reason you get locked out, they can reset passwords, things like that. You can always contact me for anything and I'll get you in the right direction, but you're going to contact me for more consultative things, reviewing the investments, going through risk tolerance questionnaires, things like that. But on the information I send you after the call, you'll have this again in the enrollment kit. But again, this is when you're ready to start saving, this is how you're going to do it. And then I do want to go through these slides because if you haven't done this exercise in a while, I highly encourage you, if you haven't seen one of your Social Security statements in a while, they no longer mail that out. So you have to go to this specific website, which is www.ssa.gov. And when you go on there, they'll ask you some security questions based on your Social Security number, and you're going to have to register an account. But once you do that, you can go to the benefit page and it will show you at retirement how much your monthly payment will be from Social Security. So in most cases, it'll say something like if you retire at age 62 and apply for Social Security, you'll get X amount per month. And that's like a pension. You get that every month for the rest of your life. They put a little bit of inflation. And there's typically a sliding scale where if you defer it to say age 68, that's a higher number. So you definitely, if you are using the software, you want to put that in there. If you're not saving anywhere, that's your current retirement plan right now. In Social Security, they are taking about 5% out of your check right now. So the reason for this presentation is to go over, if you do that privately, the incentive that will be provided by the company. So that's the next sliver here. We have retirement account. And on the retirement account, that's another slice that you can put into your planning. That's what you're going to make if you contribute to Voya and along with the company match. And then the cool thing about the software, when you're prompted, you can also put other assets in there. So if anybody has a Roth IRA, if they have a brokerage account, you can actually put that information into the software. And what it does, once you register, I'd highly encourage you to get the smartphone app. And I've gone through this prompt, I put in the retirement information. So every time I open up the smartphone, it shows me your goal is to pull out X per month. And then it says, based on what you're doing, you know, how much you're putting away, how you're allocated, this is how much we project you'll be able to pull out per month. So the reason I encourage that is psychologically, one of the hardest things to do is to save money today through payroll for my future self. That's a hard concept. But if I can see through the projections, based on what I'm doing, how much I can pull out, and I can see my retirement plan come together, it's something tangible, and it's, you know, it adds to the discipline of why I'm saving through payroll. Okay, so how the plan works, you're going to choose how much money per paycheck that you want to pull out when you're ready to start saving. The most common way is a percentage, like 3% of my gross income, 5% of my gross income, but you can also elect a flat dollar amount. And the amount that you elect is going to be automatically pulled from your paycheck each time. Now that is a flexible amount, so you're not bound to what you put. So if you get, you know, optimistic and you say, I want to put away 6%, and then things get really tight, you can turn that off or you can lower it. And all of these things are going to be done from the smartphone app. Some other reasons why your employer is a good place to save. The first one is you're always in control. So I mentioned that the government's already pulling out 5% of your check. If you were to pull out 5% privately, you get to choose how it's invested. You can make changes daily. You're in control. And I don't know about you, but I would prefer to have that instead of how the government invests our money for Social Security. Saving automatically. So the good thing per paycheck, when you do it per paycheck, you're doing what's called dollar cost averaging. And history has shown that this is the best way to invest periodically. So you're buying stocks in the market while it's high and low, and you're spreading out the risk. So it's another great reason to save through payroll. And then everything that you defer on contributions on a tax year, you're actually lowering your taxable income. So if you say, hey, I make $50,000 a year and I'm going to defer 4%, so $2,000 is going to come out, that's actually going to lower your taxable income by $2,000. So that would be something to discuss with your tax preparer. There may be an advantage to get you in a lower taxable bracket. And then we'll get into more detail on how you can invest your way. I'll close on the different investment options and all the really nice tools that you're going to have on the investments. So some other reasons to save, subject to plan rules. This plan is eligible if you have, I know this plan is new to Stellar Residential, so if you have a previous employer plan that you'd like to roll over, this plan does allow for rollovers, and I can show you how to do that. I'd be a good resource to help you, just so you can consolidate. I wouldn't recommend keeping your money in a previous employer plan long-term because, if they make changes and they can't reach you, I'm just saying there's a state fund where that money goes, and it's a multi-million-dollar fund in Arizona, so it happens a lot. So let's go over how we went through those items. Let's discuss what the plan offers, some of the cool items. The cool thing is, first of all, the vesting is 100%. So what that means is everything that you save and what's matched by the employer is going to be your money right away as it comes out of your check. The only time that there would be a vesting schedule subject if the company ever did a profit sharing or a discretionary match, something above and beyond. but on the basic match that we'll go over, that's vested right away. Let's talk about the access. So you can access your money through withdrawals and loans during your working years. You typically can't take a distribution until you either turn 59 and a half for an in-service distribution, or you retire or terminate your employment. You can take a distribution at that time. But this plan does allow for hardship withdrawals. So that would be you have excessive medical bills, you're facing foreclosure on a house, a spouse is affected by COVID and it's affecting your income, things like that. We do have a short form for a hardship that you can apply for to get access. And then the plan also allows for loans. So we see this a lot, to pay off credit cards. It's not the first place I would take a loan, but if you do, we can have up to a 5-year amortization schedule, and you can pay it back through payroll pre-tax so that it's not taxed. So as far as the savings, this is just a guesstimate. Everybody's situation is going to be unique based off of their age and their goals, but just studies show systematically that you'll see percentages in this area. And one of the things, so Stellar's got an awesome opportunity for you as far as the employer match. And I actually wanted to pull this aside for a second and show you that. I want to go over the opportunity, and hopefully on this switch, you guys can still see my screen. I was having a couple technical difficulties yesterday, but this is another sheet that I'm going to send out. I want to run through this real quick. I touched on some of these housekeeping items. But first of all, when I talked about eligibility, so if you've been with Stellar 90 days already today, you're eligible to start in July. If you were just hired in the first quarter and you haven't met the 90 days, then you'll be eligible to come on the first pay period, as I mentioned, in October. And the cool thing about Voya is they'll mail you a packet 30 days before that eligibility date with all the information that I'm kind of going over now. But you can only enter the plan quarterly. Now, I'd mentioned on the vesting schedule that there's only a vesting schedule with profit sharing and discretionary matching. But the opportunity that's being presented through a safe harbor is that the immediate match is vested 100%. Okay. I had mentioned normal retirement age at 65, even though you can do in-service withdrawals at 59 and a half. The only compensation that you can utilize is W-2 wages. So if you get 1099 bonuses, things like that, you can't defer that income. This is only W-2 income. I'd mentioned you can do it pre-tax. Obviously, what you elect is vested 100%. And then here's the opportunity. So the plan is a safe harbor basic match. And what that means is your first 3% that you defer, you're going to be matched up to 100%. So if I match 1%, if I defer 1%, they match 1%, 2%, 2%, 3%, 3%, and then they match 50% of the next 2. So what that means, if I defer 4%, they're going to match 3.5%. And the max company benefit, if I get to a point where I'm deferring 5% of my gross income, the company will match 4%. And that's a kind of a magic number because that's on the bottom half of that chart that was showing you. They recommend between 5 and 12. But really, if you get to a point where you're deferring 5% and the company is matching 4%, you really have 9% going. And that's an ideal situation if you talk to most financial advisors. That's a really great opportunity. We had covered these things a little bit more on the distributions. I'd mentioned that it does allow for hardship distributions. And then on the loans, you have to have a minimum loan of $1,000, and you can loan up to 50% of your vested balance. So what that means is you have to have at least $2,000 in your account before you can take a loan of $1,000. And then you can have 2%. You can have 2%, 2 outstanding loans at any time, but they can't be more than 50% of your balance. Okay, so we do have internal plan sponsors that can help you with loans and the reamortization schedule. So I just wanted to let you know that you do have those accesses and I wanted to go over that opportunity with you. Go back. Okay, so going back here, so now that we've gone over the opportunity, so we mentioned that the Stellar Residential is rolling out, a Fortune 500 plan. They have an awesome incentive. This illustration is showing the only thing they can't provide you is time. So this is saying a 25-year-old that's putting away $100 a month is going to be in much better shape than a 45-year-old that's putting away $300 a month. Just you want to get started as early as you can. The power of compound interest will really come to light if you take a look at the retirement software, and it's really a great opportunity. Like I said, the government's already taken 5% out of your check. If you're confident in their plan, great. If you're not, or you want to supplement that, your company is willing to meet you almost halfway if you would do 5% of your own money. So some great incentives. Okay, now that we've gone through most of the housekeeping items, how the plan works, I do want to go over the investments. And I'm going to go over conceptually the investments, and then I'm actually going to open up the enrollment kit that we sent out and get into a little bit more detail. But to get started, I mentioned the retirement plan software. You have, all types of investors and portfolios. But basically, there's 3 different ways before I get into detail. So the first one, you're actually going to be prompted by this. It says, give me advice to get there, have a professional take the lead. So we've hired a company called Morningstar. They've been in the industry a very long time, have a very good track record. And you'll actually be prompted by this when you do your initial registration. You can actually hire a professional money manager to pick your portfolios. They'll ask you some questions, and it's a very engaging, very nice feature that we have. And I'll go over a little bit, I'll detail each one of these 3. So that'll be an option that you have. The second one says, guide me and choose from defined options. So this is actually the default option if you don't choose your own investments. And what these are called are target date funds. And how a target date fund works is based off of your age. What Voya is going to do, with 65 being the target date, is the farther you are from that target, the more aggressive your portfolio is going to be. And then what they're going to do is they're going to rebalance the quarterly, your portfolio. It's going to diversify in all the asset classes. And as you get closer to retirement, it's going to become more conservative, meaning that they're going to pull out of your equity holdings into more conservative things like bonds, government securities, cash, things like that. And the thought process behind that is, if I'm 60 today and I'm retiring in 65, I need to pull from this money, I shouldn't be all in the market. If there was a correction like there was earlier this year, I don't have the time horizon to get back to where I was. But if I'm in my 30s, 40s, 50s, early 50s, and I don't need to pull on that money for 12 to 15 years, I can afford to have more market exposure, because if we do have a correction or a downturn, I have the time horizon to get back to where I was. So that's the thought process behind those. Again, another hands-off approach. And then the third one says, get there myself, choose my own investment mix. So this is a lot of market analysts will call this self-directing or advisors. So you can pick your own funds. I will get into detail on the funds that are available. We have all of the asset classes, multiple money managers. So if you're more hands-on and you want to pick your own funds, then we have some pretty good tools. So I did talk about the target date funds. Again, this is the default. This is the hands-off approach. But it's still proactive. We wanted to make sure that the default option was a good one. And then if you do self-direct, especially if you come to me directly for assistance on helping you pick your funds, I'm going to ask you to do a what's called a risk tolerance questionnaire. And this is a link that I'll send you. And really what it does is it's going to ask you a series of questions based on your time horizon, your risk tolerance, domestic versus international funds. And based on how you answer the questions, it's going to tell you 2 things. It's going to tell you, A, your risk tolerance. So are you conservative to moderate to aggressive? But B, more importantly, it's going to give you a sample portfolio. And what I mean by that is it's still going to request that you diversify in all of the different asset classes, but it'll give you a roadmap saying, you know, based on how you scored, we think you should have 30% in this asset class. So you can actually go in there and, you know, pick 30% of the funds that you want in that asset class. And it's still going to give you a roadmap. So we still want to provide you the tools if you're hands-on. This is something I can definitely assist you with when you're ready to self-direct. And then I had mentioned that the plan does allow for rollovers from previous plans. So if you're in that boat, you need assistance. And I'll go over the 4 options because I think it's good, because you would have the 4 options with your money if you terminated a retirement or you retired with Stellar Residential. And I don't recommend the first 2, but I'll go over them. The first one is if you have money in an old 401k plan, you can keep it there. But I mentioned that wouldn't be my long-term strategy in case the employer makes a change or they do a force out or something of that nature. The second option that I don't recommend unless you absolutely need money is to take a distribution. Whenever we hear the word distribution, that means A, tax as ordinary income, and B, if you're under the age of 59 and a half, there's also a 10% penalty, okay? I did mention hardship. Most plans do allow for hardship. So even if you have an old 401k and you need to pull cash, ask them if they have a hardship distribution form, because that'll waive the 10% penalty if you're under the age of 59 and a half. Okay, so I don't recommend that one, but if you need cash, you need cash. We're definitely going through some unseen times. Third thing is you can roll the money into a self-directed account. So if you have a financial advisor or you go to a bank and you open up a self-directed qualified IRA, you can roll the money from a previous employer-sponsored plan to a self-directed. And then the fourth and final option is you can roll the money from a previous employer-sponsored plan to a new one. So that'll be another option for you. But again, if you need assistance on that, you can let me know. I'm going to go to the last attachment that I'll be sending you. So this is the actual enrollment kit that I am going to send to everybody. And as I had mentioned on page 1, which is this one right here, this will be that page that I showed you on how to enroll when you're ready. It has the Voya customer service registered rep hours from 8 a.m. to 9 p.m. But there's about 3 more pages that I want to cover with you. I have 326 where I'm at, so 226 where we're at, so I got 4 more minutes. So I want to cover this and leave time for some questions. I did mention that once you register, please get the app. As you can see on there, you can do everything: change your deferrals, request loans, change your investments 24/7. The technology is really nice. We had talked about the investments, the target date funds that are available. And then on the enrollment kit, I had mentioned target date, but there's also risk-based funds with Vanguard. And I'm gonna go to a page that shows all the funds on one page, but just know that Vanguard, another name that's been around for a while, very good track record, has funds that are not based on your time horizon, but based on your risk. So you can go in and out of those funds. So if you click that link, this is what that self-assessment looks like. So I was mentioning, here's all of the asset class keys. So you have stability of principal, which is like a money market. Market analysts will call this cash. When you hear people say, hey, I want to be on the sideline in cash because I don't like what's going on, you always have that option to move your money over into that. And then we go to another asset class, which is bonds, includes government securities, municipalities, fixed income, more conservative things. And then we get into the equities, which we have, you know, large cap, small cap, mid cap, and then we have the global and international. But what I wanted to show you is, oops, that's not what I meant to do, is that even if you're self-directing, let me go back to that page. I had mentioned it's going to that it'll show you your risk tolerance questionnaire. But when I go through this asset class key right here, when I was talking about the portfolio, studies show also that, you know, you don't see the same asset class winning 2 years in a row. So they're saying you should still diversify. And here we go. Sorry about that. we're coming back up on that page. So what I'm saying is, even if you score aggressive right here, it's still saying that, hey, maybe you should have a little bit of cash. You should have some small caps, some mid cap, some large cap. And even though you scored aggressive, we don't think you should have more than 30% of your portfolio in these international and global mutual funds. I call those the emotional funds. So even if you're self-directing, it still gives you some pretty good tools and roadmaps to go by. And let's see. Let's go. Make this smaller real quick so I can go down there faster. So where I'm going to go, I'm going to find a page that shows all of the investment pages, all the investments on one page. And the cool thing is, when you're looking online, these are all going to be, this talks about the default option. When you're going online, it's going to show you the hyperlink. So when you click on the hyperlink, I'm going to go to the end and show you what it's going to give you a one-page Morningstar report. So it's going to be yet another tool that you can take a look at. And this is what they look like. I want to go back to the page. When I send you the enrollment kit, don't be discouraged. It's 112 pages. The last 3 quarters are just all of the mutual fund pages. But I passed it. I do want to go back and show you the one page. And I'll blow it up a little bit on my screen. Okay, here we go. So this is a snapshot of all of the mutual funds. So like I said, when you're reallocating or choosing your investments for the first time, these are all going to be hyperlinks. And I'm going to give you an example of what one looks like. But you can see these are all of the target date funds that have the years. You have the risk-based portfolios with Vanguard. And you can, and I just want to show you, and the cool thing too online is these are divided by asset class, which is important. But I just wanted to show you that you have multiple money managers of A-rated funds from Goldman Sachs, American Funds. We mentioned Vanguard, ClearBridge. So you're going to have very good fund lineup and multiple different options. But where I wanted to close, and we're right up on 1:30. So I just want to show you one example, and then if we have any questions, I'll take some questions. Here we go. So the back part of your enrollment kit is just a bunch of these one pages. So this is just an example. I just came up on this one. So if I would have clicked on that Voya Index Solution, this is one of those target date funds. So I'd have to be pretty young, because this is saying I'm going to turn 65 rounded to the year 2050. But I just want to show you how these work. So it just says my investment objective and strategy. You just want to make sure this is in line with what you're looking for, or how you scored on your risk tolerance questionnaire. But then it's also going to give you that portfolio analysis. So you're going to see what's allocated in U.S. stocks, non-U.S. stocks, bonds, cash. And then it breaks it down by the Morningstar, and this is using Morningstar, showing you the different sectors, how it's allocated, and it's going to tell you a little bit more about the fund. For my day trading people, it'll show you the ticker symbol. If some people follow that, so it is going to have some really good tools. But again, all of this will be able to be done online. There was a beneficiary form that's in the book. Please don't fill that out and send that to anybody, because that will not be on file anywhere. When you go to register for the first time, make sure you assign your beneficiary. That can be a person or a trust. So you want to make sure you do those. And there's other preference things when you register, like, do I want to get a quarterly statement mailed to me? Do I want to email it to me? So some pretty good tools. That was the information. So I wanted to see if anybody following the presentation had any questions for me at this point, but I also wanted to put my contact information back up on the screen and let you know that I will be sending all of the attachments that I just covered. But let me get my information back on the screen, and then I'll see, did anybody have any questions at this point? Either online or through chat. All right, you guys got it down, all experts. So again, I'll send out this information as soon as I convert this call into a YouTube link. And everybody that's on the call, I'll respond on the invitation and send these 3 attachments along with that link in case you had to drop off early. But again, please, if you think of something later, please contact me. Just to repeat, next week is if you want to start in July, you're going to have to do this registration by next week. But again, it's a flexible benefit and you can enter quarterly. Okay. With that said, I hope you all have a wonderful weekend, and please reach out to me with any additional questions. Thank you.